Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In this video I'd like to show a trade that did not set up as anticipated or did not unfold as anticipated. I believe this is important because there's far too many gurus and software developers who only ever show good trades, so it's actually important to show the other side of the coin and show trades that don't turn out as anticipated, because as all professional traders know, not all trades turn out as anticipated or profitable. Some are losing, some just don't go the way as anticipated. So in this video I want to specifically have a look at a setup, what we call a holy grail trade setup that we were looking at in yesterday's customer training webinar, and that was this TS1 sell here. Now, why is this a holy grail trade setup? Well, in a holy grail trade setup we assume that the market, if I put the analysis on here, we assume that the market is made a wave 1 down, that this correction is in a wave 2, and therefore we're anticipating a strong wave 3 type swing. And in the yesterday's training webinar I was anticipating that it was going to get down to this typical wave 3 WPT, and obviously you can see it didn't. It basically chopped sideways all day. So why do we first of all, why do we actually decide this was a holy grail trade setup? Well, it all depends on how important this previous high is here, and we define that by going to the higher time frame and see whether there's larger degree resistance, in this case at that higher time frame. So now let's go to the 15-minute chart. This is the NQ 3-minute chart here, by the way. So if we go to the NQ on the 15-minute chart and we have a look at this, this is what I was looking at in the webinar. I'll just take this off and put it on again. Excuse me. What I was had on the chart was we had a last swing into this low down here. So this was the last important swing. I placed a DP off the chart from this pivot, just dragged it across horizontally. And what I was saying was that because this pivot here, basically in the first couple of bars of trading of yesterday, unfolded at this 15-minute decision point, this was then deemed to be an important high, and therefore the market was likely to go down. And obviously you can see this isn't what happened. The market just chopped sideways. So that's the whole purpose of this video, to show that some trades don't unfold as anticipated. So that was the setup, is that there was our important high, in other words a resistance at the higher time frame, which was the 15-minute. If I go back to the 3-minute, therefore I define this as the start of a sequence or an important high. Excuse me. Therefore this decline down here was likely to be a wave 1. Therefore this correction here unfolded as an ABC was likely to be a wave 2. Therefore I was anticipating a wave 3 type decline down into the typical wave 3 WPT. So how could you manage this? Well, at the time I was saying that at the very least, once the market starts to go with you quite nicely, you want to have your stop at break even. Breaking even here would be back at 87.5, so you could have had your stop at break even and be stopped out for a zero profit or loss a bit later on. But one thing you need to do is watch how markets unfold as they're going with you. And if the market is going choppy and sideways like this for so long, I mean this initial entry was at 10:45, so the market basically at 1:30, so that's two and a half hours later, was just chopping sideways and going nowhere. You could think, well, hang on a second, this trade probably isn't going to unfold as anticipated. Perhaps bring your stop to perhaps just above these highs here, and if you'd done that, you'd have probably been locking in just say a 0.7 hour profit, so a little sort of small profit. So that's how that trade unfolded yesterday. And again, I wanted to go over this because I think it's important to show trades that don't unfold as anticipated. But what does that mean? Does that mean these kind of setups are no good and they don't work? Well, of course that's not true. As we know, in any kind of trading, trading is always a matter of probabilities. So if you only have half your trades like this unfold, or even only 40% trades like this unfold well, because the profits are so large, you see here we're anticipating a profit of approximately 7.5 R, or 7.5 times the initial risk. So can you see, if you only half the time you have profits that are this big, and half the time you have -1 R losses, in other words small losses, you're doing very well over time. So that's the nature of trading, is that even though this set up to what appeared at the time to be a picture perfect or textbook perfect holy grail trade setup, the market basically had other ideas and basically chopped sideways all day. And that is just basically the nature of trading. You can set up with the best will in the world, but the market will do what it wants. This is why we have this is why we use our correct position sizing to keep our losses small and under control when they don't unfold as anticipated, and we have profits that are much, much greater than the losses when they do unfold as anticipated. So overall, a day where we had what initially looked like a good trade setup, but the market just chopped sideways and didn't go where we were anticipating. And that's just trading. You do have days like this, and it's important as a professional trader to know and understand that sometimes the markets just don't do what you anticipate, and that's perfectly okay.